How to get a business loan for a trucking company incredibly fast without collateral, even with it, with bad credit or good credit, plus 0% interest for 6 to 18 months. Hi, this is Michael with Viral Funding Solutions, and today I have a great one for you, jam-packed with so much good information that nobody else is sharing with you. What's happening today in this market for the transportation slash trucking owner operator field, and so you'll want to stick with me until the very end of this, as you will get a lot of extra bonus tips and material. Now, as you see here on the screen, I have a document that I will be going through. You see a truck on the screen there. And just below this, I'll reveal some different services and programs and the requirements, qualifications, and a little bit more. But before you even see that, what you have to know, like I said earlier, the market is always shifting. Where we were in the past, pre-COVID, during COVID, where we are now, and where we're going with prime rates increasing, with the market outlook, supply chain issues, the large amount of demand, less of a supply perhaps, imported, exported goods domestically working, and a lot more. You have to keep in mind that transportation and trucking itself, it is a very high risk field. So what you will see is up to date, and it will look like this for some time. Even with prime rates increasing, you'll see that those parameters, they change, and it becomes more restrictive and harder to attain the total financing, those trucks, perhaps for equipment financing. Maybe you're looking at a form of secured financing, lines of credit, bank loans. Perhaps that doesn't work, and this is why you're turning over to this. You have high credit utilization on your personal credit side, maybe business credit. How much of it do you have? Do you have any of it? Have you started it? So there are so many questions. So just keep in mind that. And down below, there will be a questionnaire form for you to fill out to get in touch with me, where you can get a very highly personalized and customized email response on your best funding option and options thoroughly broken down. I'll show you what you can and can't qualify, so at least you know it is well in depth. It'll be amazing stuff, or you can even get started on that email with your application and where I recommend going, as I work with the best lenders and underwriters as being an expert business loan broker. Now, we're going to start with one option, and you're going to see a couple of them. This may look familiar. Perhaps you filled out a questionnaire, but it's more customized to you when you get that questionnaire and more response, or maybe some ballpark numbers. But here, there are plenty of them. So I want to start off with the unsecured financing. And this meaning you don't have to offer up collateral to get it. And then I'll get into secured financing options. And what are all of these that are on the table? Where are you located? Maybe that has something to do with it. And I'll say this: if you're in Puerto Rico, Canada, we can still look. Certain lenders will. Private investors may even look at it even deeper and consider it, and may ask for more financials because they're taking a deeper look. But you have to understand that each lender is different. Each direct lender, each brokerage, the way we're set up, it is completely different from each and every one. So if you were, for example, based in Canada, you may not qualify for unsecured term loans. Even if you have the amount of time in business, you may not have the revenue needed, or maybe your bank, the one you have maybe in Canada, you're based in Canada, you're working, your business is there. Well, we can still take a look to see those bank statements, but we want to see you're depositing it enough, and we want to make sure it's correct and there's enough sufficient amount in there to justify it. So right here, unsecured term loan option, it might be the best lump sum option of all. I may tell you to please skip that, or you could get started here. And after the please skip, I may even put the reasoning, because skip it because you are lower on revenue. And then I may explain it more in the details below, something similar to that. It looks different for each individual. So I can tell you something like, please skip. If it doesn't work, that may not be there. If you're in the market for a monthly repayment, a lump sum without collateral, you can keep reading this. An unsecured term loan of this lender will go between 1 to 2 years without having to look at equipment financing traditionally. And I'll jump into that. If you're looking for equipment, what are the parameters? What is my down payment? But right now, let's focus on the unsecured term loan. This is a monthly repayment. And I want you to know this. Listen carefully. Please give me your undivided attention. If you do not have 5+ years in business right now, and you are not generating somewhere between 75 to 100,000 plus per month in monthly revenue. Deposits is different than revenue. So if you're not depositing that, and there's a lower barometer if you're not in the trucking industry, So if you're not associated, then it'll look different and it can apply different. It's just trucking is just super high risk right now in this market. Most lenders don't want to lend, and a lot of people can end up going on defaults. A lot of stuff happens if you don't have a lot on fleet, on the ground, non-operational. You have trucks just sitting in the garage. You need to get repairs for, pick it back up to double, triple, quadruple your money, recover your costs where you are, exceed your expenses, etc. You may be in that situation. That's why that questionnaire form is crucial. Crucial. Excuse me, I don't know what I say. I was gonna say critical. I mixed critical with crucial. So if you don't have 5+ years generally, and you're not generating at least not even 50, not even 25, like a minimum of other industries, you want to normally be generating like 75 to 100,000. If you have some off time, like where you're like, oh well, one of my revenue months was 50,000, another one was 75, then I had an 80,000. It's possible that it can still work because your overall revenue is substantial enough. You're probably doing way above 500, way above 6, 7, 800,000 at that point. And the stronger revenue you have, the better it'll look for you. But think about it that way when you're generating 75,000 to 100,000 a month, and without, I'm gonna do some extra calculations on my side, not just that revenue. So about 900,000, maybe at a minimum of 800,000 in annual gross revenue you're generating to get that. But we can still look at revenue underneath that. Maybe you get considered for an unsecured term loan, but it's still very difficult for a monthly option if you don't have 5+ years in business and you're not generating that lump sum amount of 75,000 to about 100,000. And again, we can probably look at 50,000, a little bit under 50,000 to consider a monthly repayment. And there's these cash advances that where a monthly lender may come in. It's very rare, but even at that point, it'll be very difficult. And a lot of the times, this is why you're seeing these daily/weekly, sometimes bi-weekly repayments. And it's okay. What I tell most business owners is this: if you get a daily or weekly, just think about this. Am I taking this funding and will it benefit my repayment? Is it going to exceed my repayment? My benefits up here, my repayments down here. And I go, well, I'm going to just need to get a repair, an engine repair, or I need to get a few more trucks. I can do it with revenue-based financing. I won't qualify perhaps with equipment financing traditionally because I don't have business credit or for some other reasons. You don't want to lease and then after that have to own it the way you would want to go about it. Maybe you want to own it outright. There's a lot of situations. Maybe you're not looking at a sales lease back where you give up equipment to get the equipment. So in that case, you may have enough revenue to say, well, I'm not profitable enough to qualify for an SBA loan. And I'm going to cover that in a moment. This is why people go this route too. If you're not profitable within the last 2 to 3 years, more recently 2 years is best, and have the other requirements of credit and revenue, then it'll be most difficult to qualify. And you can get an express loan up to 350K with a minimum of 150,000 or 120,000 with stronger credit and making sure profitability and business credit and other factors are there. So I'll share with you the express loan. And even at that point, it can be difficult to get. So this is an unsecured term loan option, as you see on the screen there, usually between 1 to 2 years. Sometimes you see 1 to 3, 1 to 5 years with 6% to 30%. But lending past 2 years, unless it's equipment that's expensive enough and multiple pieces of equipment, I would say, then it is very difficult in the market today to look past 2 years. Enough being even given 24 months. A lot of the times you see up to 18 months. And so be realistic in this market. It is not as easy. You may get more. You may get up to 3, 5, 7, 10 if you're more of a bankable client, or if you get that SBA Express, perhaps a standard SBA 7A loan with real estate, perhaps up to 25 years. So you have to think about this and go, what are my better options? And if I don't have the time of business, I'm not profitable, what are my other options? Probably this one. Well, this doesn't qualify me, then a cash advance would probably work out best. So over here, you could pay probably more towards the interest. You may not want to have so much time as your accruing interest. Keeps your monthly repayments low if you have longer time. The goal is always to get longer terms. And if you can't get it from the beginning, you have to build your way. Some of you may not even get there. You may not even qualify for equipment financing for a lot of reasons. You may have thin credit, no business credit, etc. And another thing too is, well, if you started at 6 months and that's all you were given because of your credit history and revenue perhaps and or other details, then you begin and build that relationship with myself and the best lenders that I work with and underwriters, and I'll show you which one is best for you. And you go, okay, well, I paid this off early payment discount, no prepayment penalty. Okay, well, I got revenue-based financing. Well, let me start off with this. I paid it off in 3 months. Maybe you needed the extended 6 months. Okay. Then you come back and you receive more funding and you're still within those parameters. And I'll show you a more strategic partnership and roadmap. If you're starting here, how long do you have to keep doing that until you perhaps move into a monthly term lender and then you can consolidate? When can you consolidate? When can you look at an SBA Express 7A loan, etc.? What can I do in the meantime to build my business credit, fix my credit, improve it? I have all of this. I've been doing this for a long time, not only with trucking, but a lot of different industries: construction, medical, retail, you name it, manufacturing, the list goes on and on. And I see what happens in every market. So over here, no prepayment penalties, monthly payments are available, reports to the business credit bureaus. This is why you want to have established business credit. And it's not just enough to have a score and say, well, I have this with my 3 business credit bureaus. I have a paydex score. Yes, but what is actually being reported? Do you have any trade lines? What type of trade lines? Especially when it's like personal loan related and you're looking at equipment financing, installment loans, revolving loans. Like we look at these things and we go, how are you making payments? What are you building up? Do you have enough credit history for us to determine this? And each lender works a bit different, so you'll get evaluated different. So 1 to 2 year term, sometimes up to 3 years. We want to lend up to 3 years, possible equipment, and it makes sense for you to qualify for this. You weren't profitable perhaps with an SBA loan, so this may be an alternative. You can't get in a traditional equipment financing loan, or you don't want to do that. You'd rather get a lump sum, and you're okay with that. So in some circumstances, it may make sense to get you up to 3 years, but it's very hard because the lender wants to mitigate risk and they want to make sure that they can get their return as fast as possible. And even if you're given 1 to 2, less than a year, think about this. Don't bite off more than what you can chew. If you think about it and go, well, it's the rate. It's not about the interest rate. It's about the benefit exceeding your repayment. You look at that repayment and you go, okay, well, what can I do to shorten it? I want to start off with something less. You have negotiation power where instead of starting off with 80,000, we start you off with 50, 60,000. So that drops your repayment by an extra 1,000 or so. Your daily, weekly, biweekly, those repayments, they end up looking like $100 less, more or less. So that's where you're having that negotiation power. And a lot of individuals just can't get that. You're over leveraged already. You can't ask for what you want. We don't give you enough of that, what I call breathing room. So you have to take what you can get if it's going to benefit you. If it's going to hurt your cash flow, don't do it. If you're already positive by a lot, you're like, okay, well, taking a daily, weekly repayment, if that's all I can qualify for, I have margins to grow and I'm going to have enough of a cushion, enough cash flow, it'll be okay. And then I can transition, or what I can do is then double, triple, quadruple my money. Taking this money to grow it and expand your business is primarily what you want. That ROI, you have to be asking, what is my short and or long-term return on this investment, not only financially, but within your activities. Activities meaning like, what do you do day to day? What are your operations? What contracts do you have? Are you doing enough? What kind of products and services? Do you have more to offer, especially in other industries? So 1 to 2 years, sometimes up to 3 years, refinance up to 2 merchant cash advances, premium and platinum levels for stronger clients. And I have other lenders too that can look at this. There's other monthly lenders, but this is a great one to go into. Qualifications, 2 years time in business, 660 plus FICO. I may tell you don't go lower. You may not see this, but it may be there. 25,000 deposited in monthly into your business bank account, or 300,000 in annual sales. But when it comes to trucking, as you already know this, that the 300,000 is kind of irrelevant. You honestly want to be generating more. 2 years time in business is really not a good minimum for trucking transportation. It's quite difficult, more so the trucking industry out of everything, to be evaluated and looked at and say, well, 2 years time in business is enough to get you in the door here or elsewhere. But it's like a monthly lender will not look at the file and they'll say, well, you have to have at least 5 years time in business. You can meet a minimum of a 660 plus FICO. We'd ideally like you to do more. And then monthly revenue, at least 75 to 100,000, sometimes with 50,000. But at a minimum of that, a lot of lenders will not look at the file. No bankruptcies, liens, foreclosures in the last 3 years. If trucking, which you're not or you are, is equal to 5+ years in business. More details, you'll see that here as I go into all of this. The rates are 1 to 3% per month. So if you were given 12 months, that's at 1% of a risk file, and that's associated with things like your credit score, industry type, debt, revenue, and so much more. So if you were assessed at 12 months, given 1%, that's 12% interest. And then you're usually approved between 50 to 100%, if not by an extra 50%, excuse me. So be realistic. Normally you get approved between 10 to 15% of your annual gross sales. And what we look at with a lot of monthly lenders is an average of your last 6 months is what we want to see, and that's what we can base it upon. But we ideally want to see the recent 3 months. That's what we like to see things off the last the 3 months before that. are a good example to see past history where you can be and what we can have to adjust if necessary. But if you're fluctuating in the recent 3 months and you're like 80, 90, and then you're 60 on your most recent, that's hard for us to say, well, we're going to give you between 80 to 160,000 or 80 to 140,000. We might get you closer to 60 to 70,000 based off of that lower month that you're having and what it averages out. And we look at your lowest month and base it off that. And sometimes it's your highest, but it just keep in mind on how your trajectory is going. Are you projecting an increase in funds recently going up? And as well as we look at the projection value of where you can be with what you're doing now. So it's better to be on an increase than to be on a decline or just fluctuating too much. It's hard for us to get you approved for as much with that happening. And a lot of industries like trucking, what happens is the amount you get approved for, and I'm seeing this in a lot of industries, one of those also being construction, where normally people get approved for like 200,000, they're getting 100,000 less. So if that's the case, a lot of the times the lenders with revenue-based financing, they don't want to lend past 200,000 unless you have spectacular details. For some reason, you couldn't get an SBA loan, and perhaps you're looking for past 200,000. Can you even qualify for it? And then if you don't, you got to start with something and then come back, refinance, pay more funds, pay them up faster, and be able to receive more or add multiple services, which I'll get into momentarily. So I'm not going to go through all this because we have multiple services. Make sure you're depositing correctly. And I can cover this all with you in an email format and in other ways, but we'll go over here. You can also add a line of credit, other things you can do. Things like this for an unsecured term loan, documents for funding over 150,000. It's an online application I can share with you. Recent 6 months of business bank statements so we can see an overall period. 3 months is okay, but 6 months. And if you have multiple banking institutions, it's ideal that we look at each and every one of those. So if it's separate, I mean, I get maybe you send me three from one, three from another, it can be justified. But if you have multiple ones and the lender wants to look at six, they may say, hey, I want to see six from this banking institution and I want to see another six from this one. It's very common, especially if you're just submitting 3 months of bank statements and you have multiple accounts. We will want to see those if it's being deposited correctly, a lot of other things to look at. And that's not something that I'll ask for a lot of the time in the beginning. That's something that we can do in time. So recent 6 months of bank statements, 6 months of recent credit card statements, if applicable. Most recent business tax return, profit and loss balance sheets, previous year's tax return, debt schedule, if any debts, aging accounts receivables, and accounts payable report if you have any. Sometimes it can be more or less shorter. And if you're looking for less than 150,000, under 100,000 in a lot of cases, 60-second online application, 6 months of business bank statements, recent credit card statements, if applicable, invoice of equipment required if you're going for equipment financing. So I'm going to go through this rather quickly. You have other unsecured business term loan options that I can cover with you in time. And this is always evolving, but this is what you're seeing in this market as I'm releasing this on October 25th, 2022, or you'll see it at a different day release. I'm making this 25th of October, 2022. But 1 to 5 years, but 1 to 2 years is usually the markets. And even if you're looking for equipment, it's probably best to do equipment financing. Or you're looking for a lump sum you can use to buy that equipment, or however you see fit, however you decide to use those funds for other things like working capital, you can do that. You can do a combination of them, and that's what's flexible about it. And approval is based on your overall yearly income, no prepayment penalties or the payment discount. So some lenders will look at overall yearly income, others will look at just the 6 months of bank statements, or they may look a little bit more. Time of business, annual required revenue, but again, that will be difficult to justify even getting you approved, especially if you're outside of the U.S. So at a minimum of 250,000 for trucking, it's just too high risk. The lender will not take that and say, hey, we can give you a monthly repayment. So again, like I said, you want to be generating well enough revenue, even closer to 1 million, to justify getting you a monthly repayment. And I'm saying like 700, 800,000 above normally. And sometimes it may be less than 700,000, maybe middle 500, but even at that, it's too high of a risk and they don't want to lend, especially if you don't have enough time in business. You can even have 20 years time in business. And I'll go through an example momentarily. So ownership, applicants must be U.S. citizens and residents, business credit needed, and no bankruptcies, tax liens, or judgments. Please establish your business credit with all 3 credit bureaus. Time to fund 1 to 2 weeks. Interest rates range from 6 to 25% with early payment discounts. And this is uncollateralized. So if you're looking for asset-based financing, I'll get into in a moment, and that can drop your rates. Documents required for after pre-approval: 2 years of business and personal tax returns, 6 months of recent business bank statements, business debt schedule. And I may ask for a little bit more to look at because the lender may want to see that. There may be a private investor getting involved. Year-to-date financials included. So monthly advance term loan, this is for a more so cash advance situation. where we can look at doing about up to 36 months, but you have to have over 50,000. And it's still, like I said, 50,000 and above, you may have past 5 years, but you don't have 70, 80,000 and above. It's not strong enough. And what you want to use the funds for, maybe it just doesn't make sense to give you that kind of time and so forth. So that's what happens with trucking. And it's very highly hard to, like, I just want to say, not the word highly, I don't know where that came from, but it's very difficult to get approved for an advance. And these are usually like the daily, weekly type of repayments, but this monthly term loan lender does a biweekly or a monthly. And there are other monthly lenders that I work with too, but it's difficult, like I said, especially in trucking and even in other industries. You may be generating 50,000 and above past 2 years. You have strong credit, but they will not want to lend because it is very difficult and high risk. They would not want you to do that. And it takes a bit of time to actually build that. So there you see a little bit, 50,000, 650 plus FICO, less than six not sufficient funds in the last 30 days. You normally want to see that across the whole board with different products too. Less than 5 negative banking days in the last 30 days. Documents needed there, it's very much lower documentation, 3 months of business bank statements, voided check, copy of your driver's license. And I may show you like where to go and make sure you get started. And if you're looking for financing, there may be a link for you when I discuss it with you via email or in another format and/or. So qualify for traditional banking, that may be an option with your choice of 2 to 3 or 5 years of repayments, but you only get 30 to 350,000, and there's higher restrictions. And qualifications may require you to put your home on the line. It may be uncollateralized, but they may ask for that. It may ask for another piece of equipment. They may not. Just depends on what you have on the table. It's almost not exactly like an SBA loan where they want to see cash flow first, equity, liquidity, and then collateral, but they can ask for that, and you just have to be prepared. And you may not qualify, you may not be bankable of a client, but fixed annual interest rates of 6.99, and rates can be 7 to 12% or so. I've seen 6 to about 30%. So eligibility, I won't get into all that right now. I can discuss that with you in time. And then equipment financing, it may or may not work. I'll show you. And best equipment option, it can not work if you're not having at least 800,000 in annual gross revenue. So that's another point I want to make. But this 800K is not necessarily going to apply to everybody. So I want to add on here by saying perhaps if you're in like a Puerto Rico, perhaps Canada, right? I gotta readjust that to make it make more sense. But you're seeing that I have clients that also ask from other places, and they're not exactly located in the US, and they're being asked to have higher revenue to be even qualified. But if you don't have that, that doesn't necessarily mean you won't qualify. You're US based. And you can be doing at a minimum of about 120,000 in annual gross sales if your credit score is 650 or higher. There are no sales minimums if your credit score is 650 or higher. So you can start as a startup with not even meeting those revenue demands. But just understand if you are a complete startup looking for equipment financing or a truck, you can't get a lump sum because you don't meet the revenue requirements. Well, what can I do? I can increase my personal credit to 650, but ideally, you want to have as a startup, I'm going to be quite honest with you, 650 is an entrance, but you may have to be putting a higher down payment. Just keep in mind that there are lenders out there who say, hey, we can look at you with the lower credit score, 580, 600, or wherever it is. But with your credit score being low and being an issue, you're looking at down payments about 30%. 30% and above is what you're seeing. And even if you're not a high risk, you may see 20 to 30% in this market because it's so high now. And in cases, you may have 0% if you're an outstanding client. You don't have to put a down payment, and it may just be as low as 10 to 15, if not 10 to 20%. But the demand now in this market where a lot of people are looking for trucks and there's just so much out there that not everybody's getting access to them, it is much more difficult. And a lot of people leasing and then going through the purchase after that. It's kind of like a dealership, but you're doing this online and there are more benefits and flexibility, discounts, etc. There may be that on the table and more flexibility for you to work with the lenders and myself. And you can also see if you can get multiple types of services and it can really help. And so no minimum credit score if you make 120,000 in annual gross sales and have been in business for 6+ months. Preferred 1 year time in business on private party sales invoice required for the quote. And I can gather this information from you in time. And I wrote some things here just so I can make sure that I don't miss out on it and that I just want to go over. So just some of the things that we're looking for, and there's other lenders that will see this, but the majority will. And that you don't have excessive mileage, not past 10 years that the truck is old. Like less than that is better. Beyond 10 years, it is harder to justify, especially in the markets, what kind of value there actually is on top of mileage, anything wrong with it. And just be prepared that perhaps 20 to 30% down. And then after your everything is over with, what you're doing with your lease, your EFA, all this, and you can look perhaps at owning the vehicle. Now, over here, we're going to go to the additional notes. Rates start at 6%, monthly payments, longest terms 1 to 5 years. That's what you see in the market. 1 million max amount of for your first funding. What we're looking at, 65% to 100% loan to value, depending on the program, the lender. Down payments for equipment financing vary from 0 to 25% or so. Like I said, it can be 20 to 30, even higher because you have lower credit and the type of truck, right? It's not just, hey, well, I have strong cash flow and I have strong credit. Yeah, but it's also the market where that truck is, and it's such a high demand that we may ask you for a little bit more to put down because everybody's wanting it. You have bad credit, it's more scrutinizing, so we may have to also ask that we require you to put more of a higher down payment. So documents needed for funding under 100K, just 60-second online application. So more or less, you're seeing the same thing. Funding for over 150,000, everything included, if applicable. Most recent business tax return on top of that, and you can see there my recommendations. There are more lenders here. You can skip this one, but as a startup, you see a common theme there. 2+ years time in business, credits 625 and above, 100% ownership of your business, and that's putting it where you're a non-startup. So if you are a startup, are you a homeowner or have a mortgage of 2+ years? If you said yes to either or, this will qualify you. And then there may be a little bit more that we have to ask. We have different applications for up to 100,000. There may be more than 100,000 that you're looking to get, but if you can answer those and you have it, then it may make more sense. And you could put a down payment of maybe perhaps if you're a startup, you're looking at 15 to 30%, 15 to 30% and above, and that's just a very common thing that'll happen. So just be ready for it in case anything happens. Underwriting guidelines, so application, vendor invoice, or quote. Some are more flexible how they request that invoice, and I'll gather this from you. You can send it to me. I can organize it. There's other ways of a digital application with a lot of fintech companies and these lenders where you can upload them online and we can see it in our back office, which is okay. But a lot of the time, I like asking for it. You send it to me via email, which is very safe and secure. I organize it into like a Google Drive. I put everything together and or a Google Drive, Dropbox, etc. Usually Google Drive, and it'll be in there, safe and secure, and it'll help me see it even better so I can even pre-underwrite the file even more before we go into an application. Revenue, 0. Bankruptcies, foreclosures, none in the last 5 years. Ownership, 100%. Trade lines, you have to have 5. And that's not a catch, but you have to have at least 5 trade lines built. Right? Revolving loans, installment loans. What other loans have you acquired, or what other things have you done? Mortgages, etc. Existing loans equals okay. States in all 50, so this is more US based. Product features at a glance amounts to 1,250,000, but you can get more. Document fees equals 425 to $995. APRs, you're seeing 6.99 to 29.99%, but in this market, it can be beyond 29.99. It can be 33. And that's a common thing you see with like revenue-based financing. Don't be fixated on the APR, AIR. Well, what did it? No, think about the benefit exceeding the repayment. I would even say don't even look at the term. Term does matter more as well as your repayment over the interest in this market a lot of the time. But think about the benefit exceeding that. You're going to double, triple, quadruple. You're taking this, you're going to get more equipment, or you're going to put that piece of that truck back into the operational. You're going to get somebody else back on payroll because you needed to do that first. Fix the truck or do something with the truck, then get somebody on your payroll that can then operate that truck and be more of a convenience to you where you're not having to travel everywhere and anywhere like you have been, or if you have done that in the past. Terms equals 12 to 60 months. Repayment equals monthly, EFA, or lease. Down payments could be 0, could be 10% to 15%. And for starters, about 20 to 30%, so 20% of the minimum. You can fill out a quick application, DocuSign, approval, 24-hour funding. It's pretty quick. We can do it within 1 to 2 days of an approval, and then within 1 to 3 days of funding. It can be rather quick. It can be done underneath a week. It just depends on how much you can do this in, and don't add friction. I don't want to ever have friction with somebody or a pulling of a resistance band. It normally doesn't come from my end. I know my stuff very well. I'm a very punctual, disciplined person, so don't please waste my energy and time. I don't want yours to be either. So don't cause friction. If you have something you want me to clarify, please do. It's not always over a phone call. It may be if it makes sense, but you can send me a quick email. You may have my mobile number, my business number, etc., or text message me. or in a different way, and then you can get a hold of me that way. So option three, but we look like we want a complete credit application. I've worked with all these lenders, by the way, which I've not attached or attached, and I'll show you that if I have invoice or link to the equipment, which is the URL where you saw the truck with the full details, most recent 3 months of complete business bank statements in PDF format. And if you don't have that as a startup, we can look at other ways. The lender, we could go through one of them there. Option three, it might tell you that this isn't best to go through because of maybe revenue, or it's just it can qualify you, but it's just not the best way to look at you in the best file. It's best to do this, especially if we're doing a combination of an equipment financing product. Perhaps you're looking at revenue-based funding, you want a line of credit on top of that, or you were looking to get an merchant cash out advance, quick funding, so you can use towards the purchase of that equipment. That's another thing we can do and be flexible on, and say, hey, I don't have enough of a down payment, but I have enough revenue to qualify for a cash out advance. Perhaps I got an extra 20 to 30,000. I will like to actually use 20,000 of that towards the purchase of this truck, or how I'm going to go ahead and lease it for the down payment. And then I go, well, okay, the other additional 10,000 that I may have, I can use it for working capital and it'll be a benefit. Or you can use it all at once. So you're seeing the minimum credit score being low, 580s, but honestly, realistically, you're going to get scrutinized. I have a lot of business owners who they look at this, and I tell them beforehand, like, you won't qualify for a lower down payment because of your credit. Pick up your credit. Everything else is good. Maybe there's nothing derogatory, nothing wrong. And then you also want to have business credit. Make sure you have that. And if you haven't built your business credit at all or enough of it, look down below for my free business credit building video series, where you can get access to 150,000 that's tied to your EIN, not your actual social security number, up to 250,000 plus then when we're talking corporate credit. And there's a credit line hybrid program if you have strong credits, where you can get access to business credit cards at 0% interest for 6 to 18 months. That's what I would do. That credit line hybrid, pick up your credit if you're not there yet, and then do the credit line hybrid on top of the business credit building. It helps build your business credit, and then you get access to funds on the back end, tons of revolving lines of credit over time. Normally it takes about 6 to 8 months to establish business credits, sometimes underneath 4 months, but more realistically in this market, 6 to 8 months. So I would start doing that to even get qualified for equipment financing, because that's what lenders will want to look at. Important details: the approvals can be between 100 to 200% of your average monthly sales. So there again lies the question. If you're looking for a truck for 150 or wherever it is, 100,000 more or less, but you're only generating the minimum of 30,000 to even get in the door, 360,000 in annual gross revenue or so forth. Well, these lenders are going to only approve you for probably less than 36,000, or 36,000 to about 60,000 more or less, 66,000. So if you're looking for a truck at about 150,000 and you're not getting approved for that, well, where are we with your down payment? As well as, can we try to combine a revenue-based loan on top of it? And if it doesn't make sense, it doesn't make sense. There are angel investors, venture capitalists. I'll leave more options for you. 401k, IRA financing, home equity line of credit, cash out refinance, asset-based financing. The doors do not just shut. The things that shut are our mind and thinking about it wrong. So it's having the wrong belief about it. So documents required for pre-approval. I'm going to quickly go through this. And then another one, business line of credit may not work. I'll show you that because of your amounts that you have in business, how much you're depositing. You may meet the minimum, but they still don't want that. They want to see you doing higher in credit, higher in revenue to even get you approved for lines of credit, more realistically like 50,000 and above. Excuse me, in a lot of these cases, doing closer to 70 to 100,000. And then I'll show you unsecured lines of credit, normally 1 to 3% per month. Lines are either daily, weekly, or monthly. Secure lines of credit against receivables. Rates are prime rates. This is an adjustment I have to make. 6.25. By the time you're watching this, we may be up at 7%, 7.25. And so plus 2 to 8%. So you're seeing this market like 8% and above, 8 to 16 in the early teens. So keep that in mind. Approvals for lines of credit are typically 100% of your monthly sales and as much as 150%, or depending on other factors such as your credit score, industry type, time in business, debt, etc. Accounts receivable financing. Now, this is where we're getting more into the secured financing as we've transitioned. And I have other options that I'll go into unsecured. But before that, actually, I'll go into it now. You have personal loans. Actually, that's on my list. So we'll go here first. And if you have invoices, you can use and leverage, and you have more control, more totality of that, as opposed to saying, hey, I'm going to give up real estate that I have or heavy equipment to secure the funding. If you have that, great. But when you have asset-based financing, if you have trucks, you have enough of it, and you want to supply them to get the financing you need, then you have to look at it and say, how much revenue am I generating? Do I have enough time in business? Most lenders do not want to take any kind of equipment underneath 25,000, let alone under 100,000 that's depreciating and it's not appraised for a high enough amount of value that they won't consider it. So realistically, they want to be taking higher value, higher pieces of equipment to even consider that as asset that you can offer up. And if you have real estate, that's something that we can look at for sure. Accounts receivables, kind of like the alternatives of stocks and bonds, mutual funds. You have uh, inventory financing. That's another thing that we can look at. So you can use your unpaid invoices, give them off to a factoring company. I work with factoring companies as well. And that's a great direction a lot of trucking business owners, not only in the trucking industry, but in others, come to me for. And I work with the best. So after selling your book of receivables, the factoring company is responsible for receiving payment. And they take this off your plate completely as they're the ones that are working with the consumer, the person that's paying you on whatever terms you have. And they're looking at more ideally their credit as opposed to yours. And credit is not even a factor to you. So what you need to qualify at least 6+ months in business. A lot of the time it's 1+ years, especially in trucking, it's better. 40,000 in monthly receivables and or 100,000 in open receivables on 30 to 60-day terms. A million in annual sales. No minimum credit score is required because it is backed by assets. Credit, personal credit, business credit here at this point is not so much of an issue or concern. Benefits. So again, that goes back to the point that if you have low credit but you have strong receivables, you just kind of dipped. You were unfortunately in a situation where you had to go backwards. You took out a home property mortgage or something happened. You have multiple inquiries, or you're just not in a position where you're going to increase your credit right away and you need access to funds more than what you could get with a revenue based loan. Or we can add that on top perhaps. And you look at it and you go, well, won't it affect it? I have an asset-based financing. I have an unsecured financing option here. We can try to combine the two. Benefits: sell one or several invoices, get funded immediately. Manage your cash flow gaps, which is huge. Why a lot of people give up their invoices to manage your cash flow and have more cash flow to use over time. And as you're growing your revenue, you're starting to self-fund yourself. You're having self cash flow, so that way you don't always have to seek out financing. Revolving lines of credit, facility size to 50,000 and no cap. I'm not going to spend too much time on this. I have a video down below. I'll try to link you to on the accounts receivable side of the equation, but you'll want to check that out. Inventory financing may not apply to you. You have the home equity line of credit situation. I know a lot of us don't want to do a HELOC, but that may make more sense. You're in a situation, perhaps you're just getting started and you want to start a business, or you're already in it deep. Maybe you're employed, you had to take another job. You can open up your 401k. There's also 401k IRA financing, and I'll leave to you more some of those options. Personal/startup loans. This is one great one if you have strong credit. Normally 700, we can work with 680 and above. 50,000 in annual revenue is all we will look for. Zero time in business, but it requires at least 5 trade lines, personal side, and so forth. So 20,000 to 500,000 in approval amounts is what we're looking for. 700 plus experience, where we can try to work with the 680 minimal inquiries in the last 3 to 6, 9, 12 months, ideally. And you're building up that profile with different trade lines is what we want to see. And your credit utilization is good, minimal debt to income. Want to keep it very low. I know a lot of us take on personal debt in the beginning, and our credit utilization is off the roof. When you have it under control, ideally you want to do it between 1 to 5, 1 to 7% per. And as a total, that's what I would try to do. And you're like, whoa. But if you have access to multiple personal credit cards, even business credit cards, less of a factor with utilization. You continue to use personal credit utilization ratio, overall total personal credit cards. It's best to keep it as low as possible. And you're getting access to multiple cards, so you can use those. But if you have one, try to raise your limits if possible, checking in with the personal credit bureaus every 6 or so months. But that's a different part of the equation. If you want to learn about personal credit and how to fix it, increase it, even business credit, again, down below. So 6% to 18% cost of capital. That is the rate. 24 hours, 1 to 2 weeks, time to approve and fund. So it could take a little bit longer if you needed your funds like between 1 to 2 days or faster. Maybe the unsecured term loan if you qualify, or the advance would work. So look at those situations. Now back to up here. Let me move. So the prime rate, again, like I said, is 6.25. And it can be adjusted by the time you're watching this. It might be 7, it might be even low. But 6.25 plus 2%. And accounts receivables is one of the things that the SBA looks at primarily for a collateral first. They like to see that. And so it's attractive because you can lower your interest rates that way, and it gives you more control. So completed application. Oh, sorry, I kind of went ahead. I went back in time on all that. But the personal loan, you see that, the startup loan, you just want to meet those. The origination fee could be a little bit higher, but this is how they compensate themselves, the lenders, and they offer you a lower interest. So it's okay if the benefit exceeds the repayment. I won't spend too much time on this. There's already personal loan videos. I'll try to link you to down below, as well as SBA that I won't spend a lot of time on. But the SBA loan may not make sense to you because you don't have profitability. An SBA express loan may work, and this is not a loophole by any means, but you may be qualified for just 2+ years time in business. Here, let's go up here to make sure that I didn't skip that. See if it's in this document. Otherwise, I'll find it in my different one. Okay, let's go over here. And I have this document, by the way, for 5+ startup trucking business funding options you can see. And I'll leave some here more or less. If it's been updated, you'll see that. And then let me open this file. And again, fill out that SBA or the questionnaire form down below, which will be in your best interest. I think this is underneath the right email. Let me see this. Yeah. So it might not open up because of that. Okay. So I want to open up this document. We have an HBA, hybrid SBA 7A loan product up to 5 million option. There's also the SBA 504. We can do commercial properties underneath this SBA 7A, so maybe making more sense. The other one's more CDC. Could be a little bit more harder to qualify for and for what you're trying to do. But the hybrid SBA loan, it's two separate loans. One's an unsecured financing product, term loan, line of credit, or cash advance, which can be funded easily and quickly and best used as bridge funding. In the meantime, you can use the other loan. It's the SBA 10-year SBA term loan is what you can look at if you qualify. An express loan or a standard loan. Express loans being up to 350K, standard above usually 350K and above, lines of credit, etc. So it takes 6 to 8 weeks for you to actually receive your funds. Our SBA loans go up to 5 million. A business needs to be generating at least 120,000 in gross revenue and 660 plus FICO. That's for the unsecured products, and you can do that to get in for an SBA. But realistically, you want to be doing north of 150, 250K for an express loan, or up to 350K. And there's some numbers here that I won't get too far into. But if you're above that, great. We can then evaluate if you're profitable, credit is good, business credit. And again, it's still scrutinizing for a lot of trucking business owners to get the type of financing they ultimately want. So it may not be as desirable if you're getting even an express loan. And you go, I could just do this with an unsecured term loan. I could just pay it off faster. That's why it's not the SBA is not always looking as attractive anymore because of those prime rates, 6.25 plus 1 to 3.75 or 1 to 4.75. If it's variable interest is what you're seeing in this market. It's not fixed a lot of the times. We schedule every quarter or at least every 90 days before the quarter is over. And we go and say, well, does there need to be a rate adjustment? Do we need to increase it? Do we need to decrease it? So an unsecured term loan, if you qualified for it at a minimum of 12%, in the SBA, you may get 12% or 11% or 10%, or maybe above 12%. Does it even look as attractive? It may be with longer terms if you can even get it. So I won't spend too much time, but we can use bridge financing. We can consolidate while we're trying to get you approved for the SBA loan. There's other topics down below as in other videos that I've already created on that subject. Now, 401k IRA financing, fixing, increasing FICO credit score. You'll want to look at that credit repair. Credit line hybrid, 0% interest for 6 to 18 months, up to 150,000, up to 250,000. Even you don't even have to personally guarantee it at those points, but you can leverage your personal credit to get business credit cards and start stacking multiple business credit cards. And ideally, you don't really have to have a business to even get access to business credit cards because you're leveraging your personal credit. And ideally, a 650, if not 700 and above, is much helpful. But at this program, we want to see at least a 680 plus on all 3 consumer credit bureaus, personal side, to be even looked at. But I would add this in. It's very important for you to look at this and say, well, I can get access to multiple business credit cards, and I won't spend too much time on qualifications. I have other video content on that. I'll try to link you to down below. Build your business credit. This is what we're going to end it off on, and I'll give you an example. Build your business credit. You're not going to be credit worthy for these traditional equipment financing options. Equipment financing, online, offline business loans, lines of credit, business lines of credit, I mean, not revolving back end business credit cards. And getting access to unsecured term loans, SBA loans, all these other options that require you to have business credit established. So to work with me, I'll leave those options down below. A lot of people are taking advantage of this, not only in trucking, but they're jumping on it like heavily. Others come back to me and go, I wish I would have known that I needed to build my business credit and have it look like this. for somebody to approve me for an SBA loan, let alone approve me for the maximum amount. So when you have your business credit established enough, the difference can be a lot. It can be a good 100 to 200,000 plus in maximum funding, and then not having to come back or get bridge funding that can help. So think about that. And again, like I said, we can use bridge funding, unsecured options. When you get that SBA loan, if you do, you can look at consolidating it. And again, meeting the minimum is not enough a lot of the time. So 2 years, 660 plus FICO, sometimes 650, 120, if not 150,000 for an express loan. If you want to get more, generate more. For SBA 7A loan, probably you have collateral to give up, and it can help. Yeah, with your revenue not being as substantial, maybe you have high commercial real estate property or other property real estate that we can look at and go valuation on this and what it appraises for. Maybe an extra 300 to 400,000 on top of it, or so forth. Can readjust, but make sure you just don't meet the minimum, or else you'll get the minimum. You may even get rejected. So you're seeing that here, build your business credit, and I have a video series down below. Now here's one trucking example, and I could have put a lot of them for time. Let's say your time in business, and when you fill out this questionnaire, maybe it'll look like this, and this isn't one individual's. I moved out some numbers here so it doesn't reflect theirs. And time in business, let's say you have 12 years, perhaps 13 years, perhaps you have 14 years. Let's just leave it there. 14 years. Maybe you have less than 5 years, it depends. So, okay, you have strong time in business. Now, credit, okay, strong, 680. Yeah, that can get you in the door, perhaps with some unsecured term loan lenders. Now, let's look at the revenue. But business credit, okay, first of all, you have business credit established. Now, how much of it is another question that I can get to and ask you about. But if enough, paydex score built, a lot of the lenders may just look at one business credit bureau, but they want to see what you're doing in all three and what's being shaped, what's being reported. So that may be enough. Enough of a paydex score, business liquid credit may not be attachment because it's not an SBA. Lowest monthly revenue, 55,000. Oh, okay, great. But it may not be justifiable enough to get you a monthly unsecured financing option. Like I said, if you're not generating that 70 to 80,000 and above, you're not having strong enough revenue. You're not in the 700 to 800,000 plus in annual gross revenue. Do closer to a million. Closer to a million helps justify us giving you a monthly repayment, as opposed to somebody who's just meeting halfway there. It's not enough. Even with time in business, it's like, whoa, something can happen underneath a million. Something can happen underneath 500,000, where you just dip in revenue, you become unprofitable, or you're already there. Average monthly revenue, 30,000. Average daily bank balance, 5,000, and stay above 1,000. In trucking, especially, you want to do that. More so, if 1,500 is not 2,000 plus. Anything underneath 1,000 is usually counted as negative, and this really goes across like all boards. Annual gross revenue, 360,000. Well, it's not quite where we want it to be, up higher past 500,000, 700,000, 800,000, close enough for a monthly term loan lender. You may have great business credit, great personal credit, time in business, but revenue is a catch 22 here. It's kind of hard to say and evaluate that. And you're doing well enough, highest monthly revenue, you're getting closer, average monthly sales, it's high enough. And for another industry, this would be enough. But for trucking / transportation, it can be difficult. Drop down expansion, you're looking to get multiple equipment. When you need your funds, you can tell me. Business industry, transportation / trucking, more so trucking here as that subset for more trucks and repairs. And so it may be scrutinizing as opposed to somebody here who has, they're doing 80,000 on their lowest month in the last 3 months. That's great. And their trajectory, where is it? It's better to see an increase than a decrease. They're meeting that threshold. And their average monthly revenue, they're up here, okay. Oh, wow, they have even stronger average daily bank balances. They're probably doing 700,000 plus. Maybe they're in the millions, maybe just above 500,000, but even at 500,000, it's quite difficult. And then you're seeing this, and okay, well, are you profitable? Does an SBA make sense? I'll ask you these questions. Are you looking for funding faster? Do you want to wait to get approved for an SBA loan? In the meantime, we look at getting you bridge funding, or you just want the bridge funding. That's the only thing that looks attractive right now. That may not work. Might not want to have to supply more documentation, take more time on that. You're okay with this. You don't meet the credit, maybe you're underneath. Maybe you're just meeting 660 is enough to get you in with the monthly term lender, but it's still going to be quite difficult. So the other options you have, let's say maybe you do have a lot of time in business, but you have 600 credit, underneath 660. Business credits, yes or no, it doesn't matter at this point, but you can just say yes or no to that. And lowest monthly revenue, you're seeing you're doing like 50,000, even at 50,000, I know it's not enough to be like, well, an unsecured term loan lender won't give me even at 50,000. What about an SBA Express loan or standard SBA 7A loan? Well, you're underneath the requirements and credit. Maybe you don't have enough sufficient business credit or none of it at all. And everything else probably over leveraged with a lot of different things you've been applying to. And there's a lot of a deeper thing we have to look at, especially with the bank statements that I do and so forth. So there's that other part of the equation, but at a surface level, it really just kind of disqualifies you. But 50,000, maybe you're doing 350,000, maybe you're doing 60,000, 600,000. Let's put 500,000. And those numbers, they have to be readjusted for it all to make sense. But maybe you do have an existing business loan or you don't. Let's just say no. Well, the credit alone is not enough, but your revenue is also not enough. You probably don't have business credit. That's still not enough. Okay, well, what does that leave me with? Well, you can't qualify for personal loans. Do you have assets? Because credit isn't so much of a factor as is what the demands you need to meet for those receivables to even be qualified. Maybe it's a form of inventory financing, another form of real estate equipment. Well, what are your options? Okay, maybe a cash advance where you're looking at these daily, weekly repayments. And it's not about the repayment in all cases, it's the benefit exceeding your repayment. So whether you get a $200, a $300, a $500 a day daily repayment, you have to look at your cash flows. Is it strong enough? Will it be in a position? Do you really need to use those funds? How immediately of a return on your investment will it become? I'm going to flip this quicker, or I need the full 6, 7 months, whatever, 12 months, 12 to 24 months. The point of it is it has to make sense. So if you offer up collateral, you have more leverage. Drop your repayments below 19, below 15%, more of a 10 to 12%, 10 to 15%, maybe more or less. Okay, well, I don't have collateral. It's not sufficient enough. I can't qualify through the banks. I don't get a personal loan. My credit isn't where it needs to be. I can't even get a startup loan yet. Well, I showed you some of these options for startup financing. Yeah, right here. Startup trucking business funding options, and I'll try to leave those for you down below. And as well as anything that's been additionally added, then you'll get to see that. And if you're looking for equipment, traditional equipment financing, do you have enough of a down payment? Do you have the credit, the trade lines? There's these things you have to meet because this market is just very tough on trucking, even all forms of transportation. So keep that in mind. I can go on and on with different examples, but I will not do that. I will leave it there. And there will be possibly more options for you. It just depends on what you bring to the table. Everybody's different. And I don't want to spend another hour to two or however much time we've already spent on here because you have a better idea of what you can be considered an attractive client to the lender in terms of your fundability, FICO, revenue. Always work on those and that'll help you. And then depending on if you're going to an equipment financing lender, we may need an additional equipment form filled out from you. For if it's a private investor getting involved, we might need to see more financials, and it makes more sense to do it that way. So again, just to recap, and I'll show you what this is about in a little bit. So it's not a loophole, but if you're looking at an SBA Express loan, it may not even be enough. You may not even get up to 150,000. You may only get approved for 100,000, 150, 350,000, but you needed 600,000. Well, we can look and say, hey, can we get you approved for an SBA loan of that amount? And then what if we got you a bridge loan that maybe isn't equivalent as much as the SBA Express or standard loan, but it's an additional maybe 80 and 100,000. Maybe we added a line of credit on top of that, a personal loan, etc. Ah, well, now you're getting closer to 500,000. Maybe it isn't all that yet, but can you start with a little now and then work your way up? That's what a lot of people in the trucking business as well as other industries do. And so work your way there. You're looking at the credit being an issue, especially if you don't have business credit established, the revenue requirements. You want to have at least 5+ years time in business for unsecured financing. Honestly, if you don't have that, you don't have the revenue requirements. This is why you're not getting lent those monthly term loan options. You're getting lent those daily, weekly repayments, and not necessarily are they bad. You just have to see where you're at. Everybody's in a different location and place, and how to manage those funds. Let me see what else I have here for you. And when we look at more traditional financing, like business loans, no, like with public records, inquiries, all these things that credit utilization will go into hand. So I just want to make sure I don't miss anything here. And like I said, if you're like in Canada, even Puerto Rico, and some other locations, you have to meet more than the minimum of 30,000 for equipment financing. They're probably looking at you doing 800,000 plus to get any type of equipment that they'll even consider you. But if you're not and you're in the US, perhaps a low amount of revenue, maybe sometimes there is no revenue. They may say 20, 30,000 per month is what we want to see to evaluate you for it. And it may be, but it may not be all the equipment that you want to get approved for. To just be ready for all of that. Stronger revenue will definitely help. This form right here, it's a free questionnaire form you can fill out down below in the description to get a personalized and customized email response on your best funding option and options, thoroughly broken down. And you can literally get done with this in less than a minute, but make sure you're accurate or as accurate as you can be. You'll see it on the form. And it may look like this to begin with. So I can decipher whether you're a startup or a non-startup. And this might be what you see first. And if I'm a startup or a non-startup, I'll click there. Plus you get a free 6-step approval and checklist along the way. So it'll really help maximize your potential. And then see that, fill it out. You can even get started on a thank you page and or wait so I can submit that questionnaire email response back to you, as well as my free Business Funding Mastery Academy course is down below. By the time you're watching this, it may not be for free, and it's okay if it isn't. I'm not sure if it'll be open for so long that way, but it is worth thousands upon thousands. And you might want to get in there as early as possible if you still have a chance, get grandfathered in. And if not, it's okay. There's a price on it. There's no course out there on the market today that is like this, that is going to show you an A to Z business funding potential from the fundamentals all the way breaking down the products and services and then seeing some like extra bonus tips. So make sure you check that out. I spent a good amount of time, years putting that together, and I know you will find a lot of value from it and know who I really am. If this is the first time you're watching me, I care about you as a person first, yourself as a human, who you are, and then business second. But you have to figure out that other puzzle piece here of who you need to become so you can run your business to then be able to get that business funding. Those are the key components that most people miss out on. Let me do one quick check to make sure I didn't miss anything. Oh, I also have this equipment financing form. I may leave it down below. If you're set on getting traditional equipment financing, then you may see this or you may see the other form and or in time. I think that's everything. Yeah, so let me just come back up here. And there are more things to look at that I can show you pertaining to your own needs. But yeah, like I said, the trucking industry, trucking/transportation, any kind of form of trucking, owner operating, whatever type of trucks, however you're set up. I mean, it can be quite difficult. And then in a location thing may be a factor, may not be. But you got to see how to get a business loan for a trucking company incredibly fast, with and without collateral, unsecured financing options, cash advances, unsecured term loans, lines of credit. What are the parameters for your situation? Secured financing, there could be multiple ones, and 0% interest for 6 to 18 months, business credit card building. And there's quite a few more. But if you would like to see that, perhaps get access to fuel cards, maybe I'll have a video for that, or I'll show you more of that in time. But other things you can do strategically to grow, you'll have that roadmap from me. I'll show you, regardless whether you can qualify for something or not, you'll have a roadmap on how to build your way up and what you can do potentially in time. So just looking over my doc here I have in front of me, my notes, and I believe I've covered everything. I can cover more with you in time and just understand the revenue requirements and why it's so scrutinizing in the hard market right now for trucking, especially with prime rates increasing. I wouldn't wait. This video is being released before winter time. Get ready now. Have the funds ready. And even if you don't need them, but that's more so for a line of credit, or perhaps you get offered an SBA loan where you can kind of outstretch when and where you use those funds. But if you need a lump sum sooner rather than later, that can be helpful, and take it and be able to apply it, because it's only going to get harder. It may go down a little bit, but it's only getting harder to get access not only to these types of lenders and these types of funds, maximizing the first time around, getting less than what you would thought of, but as well as banks aren't lending as much, and it's hard for them to do that because they have reservoirs for other purposes and different industries that they need to keep, and their interest rates, again, like I said, is increasing. So that is everything from me. Look down below in the description for that questionnaire if you haven't filled it out already. And for all other information, you can refer to there. If you got value, please give it a thumbs up. Share with others who you feel will get value out of it. It can be a complete stranger, a friend, or a family member. And if you haven't subscribed, please click that subscribe button and click on the bell notification icon too, so you do not miss any future videos I will be coming out with. That is everything for now. Talk soon.